associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I got to add a Palantir into that pop again today, but I'll look to buy it again on a dip. And I shorted Tesla, and I'm swinging it short. Swinging Tesla short. Waiting on S and Path to report right now. I don't have positions in either of them, but I trade them so much. I'm kind of hoping that they go down. This S has been concerning me at these mid-20 prices, mid to upper 20 prices. It just strikes me as kind of expensive. Looks like S is pricing in a $5 move, and Path is pricing in a $4 move. So we'll see. They did this thing. It looked like they were out. We get the big uptick, which we've seen just happen so many times. I remember Unity had that big uptick, and then it crashed when that thing came out. So we just see that a lot. VRM out. This thing was nuts today. I'm glad that today wasn't the day of the reverse split, though, once you guys figure that information out, because we have seen a lot of these things go bananas on the day of their reverse split, and I really want us to keep that on our radar. So I'm happy we didn't miss that, and it just happened to go today, probably in front of the earnings report for whatever reason. All right, well, I'm going to keep an eye on S and Path and do a meeting. Just close this blind a little bit. Okay, up. Looks like S is out now. Down. Trade down. Sorry, give me a second. Sorry guys, just gonna need a minute here. It didn't go to 20, but yeah, like 23 quarter-ish is about the low there. I love that options measured move trade with these names that I'm kind of already in the money in. It's like so consistent where I just cluster out these bids in the area where I'm expecting it to drop to based on that, and I don't really mind if it trades against me there because I've got such a big profit cushion and it kind of lets me do it. But like I got filled at 23.50 there basically, and on a decent little bid, and was able to just kind of dump all that on the way up real fast. It's exactly what you want. So I got filled at 23.26, Josh. I got filled below the low, but it was a partial fill. So I actually got filled below the low. If you want me to show off, if you want me to, if you want to give me a hard time about why I didn't get a better price, I got a better price than the actual low. It was just a partial of 29 shares. That's why they're not showing it in the level 1 or in the chart as an actual low, because it was only a partial fill that went off at that price. Partial fill was me. Partial fill was me. Is Path out yet? Path looks like it's trading up a little bit. It's still hard to say based on that price action if it's actually out or not. All right, this S is slowing down a little bit. It is out. Oh, thanks. Yeah, I see you guys posted it there. Just operating income's a solid beat. Revenue for Path is a beat, and achieves GAAP profitability. That's good. It's definitely good. S reports loss of 2 cents versus an estimate of loss of 4 cents, and revenue 174 million versus estimates of 170. Okay, not bad. I do think that price on S here in the upper 20s is a little bit elevated, and the stock's a bit expensive going into that, which is kind of what was making me be a bit conservative. Thanks, Pat. Revenue guidance 181 million versus 180 million. Non-GAAP margin. Guide fiscal year 25 revenue, a very small beat. Okay, yeah, the numbers look fine. The numbers look fine, but it's trading down a bit because I think it was expensive going into the report. What's that Path doing? Path's trading up, but it's not a huge, kind of considering the beat and the GAAP profitability, which I think was expected. It's another one that's a little bit expensive in that area. All right. I'm trying to keep an eye on this and do a meeting. So SPYs here are down 0.1%, Qs are down 0.75%, and the IWM is up 0.36%. So what we got today a little bit was a little bit of mean reversion off of yesterday's price action. So yesterday we know that the IWM was weak, right? You can see the IWM weakness here versus the Qs, which were strongest and led. And then today we got a little mean reversion on that. So Qs were weaker. Qs closed down 0.75%, while the IWM was able to be positive. So overall, though, it was a pretty tight, pretty boring inside day for the markets. And it's funny how many boring sessions we've had from an index perspective over the course of the last couple of weeks, where the markets have been very tight and sideways, especially midday. That doesn't mean, though, that there hasn't been trading opportunity. There actually has been a good amount of trading opportunity because of dispersion and because individual names have been able to really move and rock and roll even when the indices themselves are doing absolutely nothing. So at the end of the day today, the Qs are an inside day, I believe, right? Let me confirm that. Yes, Qs are an inside day by 9 cents. They didn't break the high by 9 cents, so Qs are an inside day. And the SPYs are also an inside day by a small amount. But it's bullish. You know, rest days after strong days within the confines of uptrends are bullish setups. So you can look for the inside nut pattern for trend continuation tomorrow. So that's what will be on our radar. It's relatively straightforward. The IWM is not an inside day because it had some relative strength. It was able to trade above yesterday's high. Even though it didn't close above yesterday's high, it was able to trade above it, and it looks fine. It looks good. We know that the weekly chart in the Russell continues to look great above this $200 level, digesting a little bit up here over the course of this week so far. The daily chart looks good, continuing to hold above not only 200, but 203, which has been a daily support zone. So there's really no major update, I think, from a market perspective after today's trading session. Again, it's basically just a bullish rest day. And that's it. Lower volume today also for the SPYs. You can see that there on the daily chart. So bullish rest day. The trend is your friend. And the same things that we've been talking about are still 100% in play and intact. You want to continue to err to the side of being long rather than being short in this market while we're in that uptrend, so that you can selectively find some shorts and news names or relatively weak stocks. And I was doing a little bit of shorting in certain stocks today myself. But generally, from a market perspective, if you want to be on the side of the market, if you want that layer of probability to be supporting your trading, you're better off being long than short this market. The market is very supportive right now for a continuation of this trend. Small dips continue to be bought. and are very supportive. The vol compression continues to press the market up higher as well. And we do need to continue to keep in the back of our heads, and that's where it belongs, in the back of our heads, that a big enough of a pullback, which breaks bigger support levels, could create a feedback cycle where selling leads to more selling. So the name of this game right now is that small dips are to be bought, and that's going to continue to happen while we're in this uptrend, and it's going to continue to happen until we lose any major support levels. But really big dips should potentially not only be bought into, but shorted into for continuation. But there's no reason to say that that's going to happen today, tomorrow, next week, next month, next year. We don't know. I mean, eventually the uptrend will break. I don't think that the rate of acceleration of this trend that the SPYs and the Qs have been in can truly last this entire calendar year, because otherwise you're going to see the NASDAQ up 50% on the year, and it's probably not possible. But one of my favorite rules of trading is that trends can last for much longer than people expect that they will. So that is something to keep in mind. And yeah, that's pretty much all I got from the market. Now, as far as individual names go, sorry, give me 1 second. I just liquidated this position. Just give me 1 quick second, please. And then we'll look at the individual stocks from today that some of us were focused on, because there actually was, and this has been a continued theme, these boring index level trading, but under the surface, a lot of really good trading. Whoops, it's the wrong price. What's that path doing? Is it still up? Yeah, path's up, but it's not up by very much. Wouldn't be surprised if we see that come down tomorrow. Let me look at those numbers again that Pat posted on Path. Reports Q4 adjusted operating income, $210 million versus $69 million. That's great. Revenue, $405 million versus $383 million. Also great. She's got profitability. Guidance is a little bit light on the Q1 rev. Don't love that. So that's why this Path probably isn't trading significantly higher. That guidance on the Q1 rev is not great. MSTR announces proposed private offering of $500 million in convertible senior notes. Why? So we can buy more Bitcoin? Cool. Okay, so on to individual stocks. So like I was saying, even though the market's been boring, there's been a good amount of individual trading opportunity that's been out there and things that we can focus on. I think my best trade of the day was actually not my best P&L trade of the day. My best P&L today was this GXAY insanity that Dimitri called out. We saw it pre-market. We saw that it was only a 1 million share float, and I was buying this thing pre-market around $9 versus $8.50, where it was building out a pre-market bull flag, and then caught this move. Slightly frustrated. I had my offer out at $16.39 to liquidate the position, and I wasn't watching it because I just had a runner left at that point. I wasn't really actively trading it anymore, and was focused on some of the other things that I was in. Did not see that it got basically 10 cents away from my offer, and then I ended up giving it all the way back down to my trailing stop here, $11.54, and getting stopped out at this candle. So I was trying to make basically 13 more cents to the upside, and I gave it back $5 on my runner, on my trailing runner, which is what it is. You know, normally I wouldn't do that. I like to utilize what I call, at a certain point with stocks, risk-reward stops. Because the truth of the matter is, my offer that I put up there at $16.39 is really pretty random. I thought it could give a move maybe to $17, which is also a little bit random of a thought process, but just thinking about how they can squeeze these low floaters. And I just threw an offer at 16 whatever, figuring, you know, that's good enough at that point, and I'll liquidate the position if I can get that type of move. If I actually saw it up there, again, I would implement what I call a risk-reward stop, which means basically, you know, if you're trying to make an extra 10 cents in this case, and your trailing stop is $5 down, it does not make any sense to continue to utilize that trailing stop and be willing to give the stock back $5 in order to make an extra 10 cents or 15 cents or whatever. So a risk reward stop is basically, you know what, I'm just going to put this stop in 15 cents down from where it's currently trading because it's 15 cents away from my offer, you know, basically just 1-to-1. And the difference to me on getting filled at, you know, 1637 versus 1607 or wherever my trailing risk reward stop would be is negligible. But the difference between me not getting the fill up there and giving it back $5 actually becomes a good bit more significant. So that's kind of the thought process on a risk reward stop for those really big moves when you're capturing them and they're getting, you know, close to a target price that you might have. It's not something that you want to do on like your 1-for-1 kick when you're first getting your risk covered, or your earlier take profit orders that are a little bit tighter from a risk reward perspective and just part of the overall game plan. It's something that you potentially want to implement when you get close to getting filled on like a bigger target like I had in this GXAY, especially when the pricing on it was a little bit random. I just didn't see it up there. I didn't type the stock up until it was getting halted on the way down and was already back a couple bucks. FSR reportedly considering bankruptcy filing and has hired advisors to help with the possible filing. I'm not surprised to see that. So yeah, that was GXAY, which again, that was my most profitable P&L name outside of the TQQQ today. But I think that the Tesla call out from the morning meeting was actually my best trade. So, I mean, we've been hammering and talking about the relative weakness in Tesla for quite some time now. There's been a lot of shorting opportunities that we have actually called out on the way down here, you know, since this high. I remember originally I actually was heavy short on this potential breakdown of support here on the 13th. More than got my risk covered, but was super greedy with it, and then it was like a failed breakdown leading to the big up move. But from this peak here at the end of December, and think about how strong the Nasdaq has been and how strong the market's been over the course of this calendar year. But basically, from that peak in December, this stock has done nothing except show relative weakness and just continue to trade down and trade down and trade down. So there's been several good shorting opportunities on the way down, and honestly, even though I've called some of them out, I've missed them. And you know, finally, we have another setup here. I think, as a matter of fact, just on this day, most recently, on March 4th, we called out the short versus, we said you could short versus 200 or short through 198. So phenomenal trade. You know, I'm happy with myself for the trade that I made in this thing today. But the truth of the matter is, if I did a better job, I could be adding on this bear flag continuation today off the stock that I'm still short from $199 when we first called that trade out, and I could be sitting here, you know, 30 bucks in the money right now on my original core position. But we've been hammering the relative weakness, hammering the consistent bad news, yet even with that, the stock trades at a tremendously high valuation. You have this bear flag pattern that came in after this thing broke down. I'm a big fan of, usually I feel like I end up talking about it on the other side of the market. I love consolidations at or in front of levels. So like a bullish, like if you have like a range, like let's forget about Tesla for a second. Say we're talking about a strong stock. If you have a strong stock that's been in a range, and then it builds out a range within that range, but at the upper end of the bigger range, if that makes sense. So you have a smaller range on the upper end, this is the bullish case, of the bigger range, right? So maybe the stock has been in a range between $45 and $50, and now the stock has spent the last week between $48.50 and $50. So you get a tighter range within the confines of the bigger range. I love that because it shows that buyers are still are really beginning to step up while there still is some overhead supply being satisfied, and those buyers stepping up deplete away through that overhead supply and set you up for that nice breakout in my hypothetical example through 50 bucks. Well, this is pretty much the opposite. You have this thing now, which after this big gap down here on January 25th, which I think was earnings, but I don't exactly remember, this thing was trading in this range. I remember calling out a short on this day, on January 30th on the first retest of the ADMA. I think a short on this day on the retest of that level in conjunction with some market strength that we had that helped push this thing back up. And then saying we should get out of the way on the short side and potentially even look for a long on February 15th. This is the day when a report hit, which I don't even think was actually true, but the stock was strong anyway, that Elon Musk increased his stake. And I don't even think that was true, but it helped boost the stock up. And then I remember, saying, all right, this is going to be on my, and this actually goes back to yesterday's afternoon meeting about talking about how stocks sometimes can take days or weeks or months to actually create a setup, and you need to know when to focus on them and when not to focus on them. I remember saying, like, okay, because of this positive Maribozu here, the stock is like off the watch list on the shorts until either this can be negated or a new short setup can come in. I thought maybe into the gap fill, if we could get a move into like this 210 area, 207 to 210, that could be a short setup if it gets there, but it never did. And then I remember when this thing was consolidating above $200 and the market was breaking higher, thinking that the strangest thing to me about this, like the chart looks better, but it should have broken, especially with the market strength, this thing should have broken out of this pattern. It should have worked better. And instead was just giving these inside days. And then that led to the short setup on March 4th with the gap down to $200 with these two inside days in a row, where we talked about, hey, you can short the inside and down, which is through 198.50, or you might be able to just short the weakness. And there might even have been bad news out that day also. I don't remember. Maybe that was the German factory news. Or you could just start as a short versus $200, and that worked phenomenally well. And then it gapped down the next day, and I think it was on this day that I actually went long on the 6th for like a cute scalp trade back through 174 or 175 on like the day 3 down, or maybe it was the day before that, I don't remember, just because you had some extension, but it was specifically going to be a day trade because the bad news, the expensive stock, the terrible technicals, and then it just went sideways here for a bunch of days, which is great. Allow this ADMA to catch up. And then again, this is the pattern that I'm talking about. You have this broader consolidation here that's been going on pretty much ever since the earnings report. So it's been going on for working on 2 months. And then over the course of the last week, you basically get a tighter consolidation at the lower end of that bigger consolidation. And I love that for a continuation trade. Usually I'm looking at that to the upside. In this case, it was actually to the downside. I don't like to call this a bear flag. I call it a bearish consolidation. It's a bearish consolidation within this broader consolidation in a stock that has been consistently relatively weak. And then this morning the stock was relatively weak again, and it got downgraded by Wells Fargo with a price target of 125. At the same time, though, it did get defended by Wedbush. So I was like, okay, great. I've got one analyst chasing price to the downside because we know analysts only chase price. Though this one actually is maybe doing a decent job. And I got another analyst who is defending the stock. And I do think that there are, some companies out there, some banks out there that are probably involved with Elon Musk in such a way where they are incentivized for Tesla and the other companies to kind of hold up in value a little bit. And maybe that's where you're seeing the defense from. But at the same time is that we also saw some insider selling. So I'm like, all right, relative weakness is gapping down pre-market way more than the market is. Potential bad news here. We got the insider selling, we got the downgrade, and I love this chart setup. So the idea was basically to short versus the 175 area this morning. It did give a very quick bounce above that 175 area because you had all this downside extension. So if anyone was short pre-market and got stopped out at 175, I'm sorry that happened. This is why I hate utilizing stop losses where the ADMA hasn't caught up to price action yet. So I did not get stopped out on the quick break of that 175. And then once the ADMA caught up to this pivot high at 940, then this was a hard stop loss for me, the actual high of the day, which is 176.05. And I actually added, I think, just in front of 176 on my short. And then, the relative weakness just came into play. The market wasn't particularly strong. The stock trended down all day, and I just kind of followed my game plan, and I'm going to swing it. And I'm not huge in it. I'm not small. I would say my position sizing on it is medium, but the game plan that I have for it is very greedy. I'm looking for a move, honestly, to like the low 140s on the break of this flag pattern, especially if the market at a certain point can begin to break. Where's that gap? 140s. Here it is. Yeah, there's a gap here that I'm looking at a little bit all the way back to January 23, which is like mid 140s. Just kind of looking at that area. So yeah, so that was a couple really good names for me, though it wasn't all sunshine and roses. It took a little bit of a loss, not too bad, in this woof. I thought that this woof earnings report that came out this morning was not that bad. It's got a 17% short float. It's super beaten up. I thought that maybe they could clear this thing through this like 275-ish resistance, and then maybe that could give you a short squeeze, because we've been seeing a lot of short squeezes up to some of these other previous resistance levels, maybe like $3.75. So even though it's a very cheap name, I bought enough stock with a game plan that I absolutely still would have been in this thing into probably $4 on the upside if that short squeeze could have came to play. But it didn't happen. The stock was super weak. You know, I traded around my initial buying position into this opening low, and it went. And then once this thing woke up and broke opening highs again, I was like, this thing really needs to go. It should not be able to fail. So I actually raised my stop to this low here at 950. And I'll say I did that while also saying I don't love that for a stop loss. I could have gotten shaken out and the trade still worked. But with the type of trade that I was looking for, I'm really looking for a momentum squeeze. So it's fine if that's not necessarily happening the second the market's opening. But once this thing woke up and this bigger volume started to come in into these highs, I shouldn't really get a significant pullback anymore. So I raised my stop to here, got stopped out, and because I was pretty greedy with it, took a small loss in that one. I also tried shorting coin today and I lost money, and I tried it short twice, and it ended up not closing great, but I lost money in it. Coin had news on a convertible debt offering. It was relatively weak pre-market. Bitcoin was trading higher. The market was flattish, but Coinbase was trading down to like 250 pre-market. The point where I thought I missed the trade. I wanted to be short versus like 260, and pre-market it traded all the way down from 260 down to like 251 or something like that. I was like, oh, I missed the trade. And then when the thing opened up, it traded back up into this 260. It created this tail here at 259.39. So I'm like, okay, I'm going to take a feeler off the second bar high. I'm a little nervous because I almost feel like if it was going to be a really good trade, they shouldn't be letting me in. And that's something we've also talked about in the past, which is like the really best trades. Sometimes they only give you one opportunity to be able to get stock. Here I am, I missed it already kind of pre-market. It gave that move. Now it's giving me an opportunity to get stock. And that's a potential warning signal. But I still like the idea of being short this thing, especially if the Bitcoin itself could roll over a little bit, which is obviously an if. So I started a feeler kind of here, and I was watching it, and then it gave this quick tail spike through that 260 and back down. So I added to the position, but then used this as a very hard stop. I did get this quick downtick here to 255, which was great because it let me cover some stock, but I was being very greedy with this also. I did not just take like a one-to-one kick to cover my risk. My pricing on it, because I had the initial sale that was not a great price and then an ad at an okay price, wasn't fantastic. And really, I'm looking for a move, like I said in the morning meeting, to at least 241, which is the daily 80 EMA, if not more like this 225 to 230 area if I'm going to be right. So almost somewhat similar but different to the Tesla game plan, like where I'm not massively heavy in Tesla, but I'm implementing a fairly greedy game plan where I'm not just covering my risk at one-to-one. As a matter of fact, that Tesla here at the end of the day, I probably have 75-80% of my position left that I'm still swinging. So I was doing something like that somewhere with coin. So I got a couple fills on the way down, but I got stopped out. I took a loss, and then this thing popped up here. I think that's where it was, and Josh called out a short up there. So got to just blindly follow Josh into the shorts sometimes because short master over there. And it was kind of the same deal. Like I was even lighter the second time, and implementing an even greedier game plan. I covered a little bit of stock on the way down. I had a bid just below this low, this pivot low that did not get filled, and then that broke up and stopped me out, and I took an even further loss, and that was the high of the day, which sucks. But it is what it is. You know, it's very hard to be perfect with trading. It's going to happen all the time where your idea ends up being right and you get shaken out of the position. But you have to have risk management. You know, I could look at this and be mad because I got stopped out basically near highs, and then my idea worked and my trade worked. But the fact of the matter is, if I'm not stopping myself out because I'm trying to avoid having risk management or something, with the way that this name moves, next thing I know, that position I'm in, the stock could be at $290, and then I got a real problem on my hands. So it's better, as much as it can hurt sometimes, like it did for me today. It's better to stop yourself out of the position, to take the loss, and then to reassess, look for a new setup, or potentially move on entirely, than it is to not take your loss, and the next thing you know, your stock coin in this case is at $290 and you're in deep trouble. And so it's like, okay, I took a healthy loss in coin, to be honest. But that would be the right way to describe it. It's healthy. It's not a small loss, but I risked what I wanted to risk, and I took that loss, and you know, it's less than the gain I have in that GXAI as an example, so it's fine. And that pretty much kind of covers my day. So, you know, again, market, very boring. If you look at the 5-minute chart of the SPY, you look at the 5-minute chart of the Qs, very, very boring. But yet, under the surface, there is a lot of trading opportunity that's out there right now. So that's all that I've got, and I am happy to answer any questions that you guys have. So first thing I'm seeing is, and this is really cool that you're doing this, Mike. I really appreciate it. Mike Reed here posting at 4:36 that he has been like bookmarking different lessons from the afternoon meetings, so that if people want to go in and get some remedial review on, I don't know, I'm just eyeballing your spreadsheet here, position sizing or sellers in the tape, or how to trade inside bars, or whatever. This is a really cool thing that Mike has put together so that traders can go in and get some added lessons onto their trading. If the T3 Live team wasn't so lazy, I would provide it to them and ask them to actually build these out into their own mini videos, but trying to get them to do anything is like pulling teeth. So thanks a lot, Mike. Appreciate it. From Vincent C, I believe is the first question that I'm seeing here at 4:19. Do you have any advice on how to recover psychologically from a major loss? I took a big loss in Roku after earnings. This is my biggest loss to date, and it's just kind of messing with my head still. I took a break, and I've been reflecting a lot on my trading plan, and I think that it's solid as far as the technical reasons to enter a trade, risk, etc. But I'm still feeling a little bit weary and timid about actually pulling the trigger in a trade. Awesome. Great question. I mean, not awesome. You know, I'm really sorry that you took the loss, and that you're, you know, working on trying to mentally recover from that. I can tell you without a doubt, though, that is it's part of trading. Anyone who has not taken an outsized loss that's much larger than they're supposed to lose in a trade hasn't been trading long enough. It'll happen to you eventually, and it's part of the game, and you know, it's how we learn from it, and it's how we recover from it, I think, is what potentially separates us from being successful traders or not successful traders going forward. So how to recover from a major loss psychologically. I think step one is acceptance, which it sounds like you're through that step already. You know, accept the fact that you made a mistake and that you took a big loss. But more than that, accept the fact that that money is gone. That money is gone. You're not getting it back. That money is gone. You might be able to make money in other trades, and I certainly hope you do, but you don't want to ever think about money that you now make in other trades going forward as making back the Roku loss. We don't want to think about making back. I think that the concept of trading with a thought process of making back losses is very damaging from a trading psychology perspective, and it sets you up for failure. Uh, One of the best ways to just continue to lose more money from my experience is to have the thought process of, I need to make it back, especially if you have that thought process of, I need to make it back in a short period of time. I'm just going to make up a random number. Maybe it's a big number for some people, maybe it's a small number for some people. I lost $10,000. It's a big number for me. I am going to make it all back. I'm going to make it all back in Roku tomorrow. That's the worst possible way that you can think. Again, you are totally setting yourself up for failure and for your losses to increase. So successful trading is about process more than anything else. One of my favorite things I like to say to traders, and I think it sets you up for good psychology, is that your job as a trader is not to make money. That's not to make money. Making money is the result of doing your job. Your job as a trader is to approach the market with consistency that is based on rules, which are based on an edge that can give you an advantage to make money in the long run. And you need to have rules in place for any scenario that can happen in the marketplace. Rules in place for risk and money management, first and foremost, that you are following in order to make sure that a really big loss like your loss in Roku never actually happens again, because sometimes there can be extenuating circumstances, but most likely, if you're telling me that this is the biggest loss you've ever taken in your career, that you violated your rules. So first and foremost, you need to make sure you have those rules. Secondly, you have to have the discipline to follow them. It's more important than anything. It's similar to what I was saying in that coin trade. Is it frustrating? And I basically got stopped. Coin's my worst name on the day. I basically got stopped out of it at the high, and then my idea worked, and the thing rolled over a whole bunch of points from when I get stopped out. But I'm reviewing that with you guys specifically because I also understand that it sucks in this situation because I'm looking at this chart where my idea worked, but I had a game plan where I had a stop loss in place. My stop loss triggered. I got out of the trade. It doesn't matter that was the high, because in another circumstance, the thing goes $50 against me further, keeps moving up, and I'm short another $50. And now this loss in coin, which I'm upset about right now, I can wholeheartedly promise you that the money that I'm down in coin, I will have zero recollection of that probably by the end of March when I'm doing like a monthly review of the names that I traded. I'll be looking at the names I traded and I'll be like, oh, you're down a couple $1,000s in coin. Like, what happened there? Like, I won't even remember, because it's insignificant to my account and to everything else, even if in the moment that it sucks. Yet, all of a sudden, if I didn't manage my risk and coin went up another $50 against me, and it had a real impact on my account, my month, my everything, you better be damn sure I'm going to remember it, because it was a huge mistake and it cost me all this money. So, the job of a trader, to circle back to what I was saying, is not to make money. That's the result of your job. The job of a trader is to have rules in place based on an edge that can enable consistency to come to you in the market, where some trades are going to work, some trades are not going to work, but you can make money in the long run. You will never make money in the long run if you don't have those rules and follow those rules. They're the key to risk management. They're the key to upside profitability. So then the next thing is, like I said, admit to yourself that the money is gone, and that all you need to do, and actually to be successful, is to follow the rules and to follow the trading plan. That's why you have developed them for yourself to begin with. Your P&L doesn't matter. I can't tell you, one of the hardest things for me in trading, one of the things that took me the longest to get to with my trading was my P&L having no effect on me, to be honest. Um, I can look at my P&L. I could be $500 down. I could be up or down, $5,000 up or down, honestly $50,000 up or down, and it doesn't really affect me. Like, yeah, I might be a little bit happier or a little bit less happy, but it's never going to impact actually the way that I trade or anything like that. And honestly, that part, to get to that point, that probably took me, how long have I been trading now? I don't know. I want to say 8 years. I'm gonna somewhere 7 to 10 years, somewhere in that range, is how long it took me to get to the point where I just like genuinely really don't care what my P&L is when I'm trading. Um, I had a point this morning where I was actually up a good amount of P&L and I didn't even realize it, and I looked at it and I was like, oh, that's a nice number. I'm happy to see that. But that's like literally where I'm at, and it's an important thing, and it enables you to trade better. But it took me 7 to 10 years of experience to get to that point. The next thing that I would tell you though is that if you are struggling a little bit, you have your game plan, you have your rules, you're just struggling to pull the trigger a little bit on your trading, just trade really small right now. The P&L is not as important as the consistency. Right? Remember, I said that your job as a trader is not to make money. Your job as a trader is just to do the right things consistently over time. So just focus on doing the right things consistently over time. Do it with numbers and money that are much more inconsequential to your P&L. If you're used to making and losing $1,000 a day, make and lose $200 a day for a little while. Get back in the groove. Get back in the groove of trading. Treat it like it's real, but don't care about the P&L. Care about the process. And then as you do that, and as you see positive results, I think that naturally over time, those feelings that you have right now where you're feeling timid and weary about pulling the trigger will naturally kind of begin to subside, and you can build back in a little bit over time. So that's my suggestion. That's what I would work on, Vincent, and I hope that helps, and I appreciate the question. Scrolling down here, next I'm seeing is from Rex. This morning I traded Uber. Okay, I've heard all about that Uber inside day. Got mentioned in yesterday's afternoon meeting, and it got mentioned this morning in the morning meeting. I traded Uber through the inside day high at 10:30 to 11:30-ish. Okay, so the inside day actually broke on the first bar at the open with a tremendous amount of strength. But you're saying 10:30-ish? It's well above it at that point. Let me read the rest of what you have to say. Uber was forming a bull flag on the 5 and the 15. Okay, I see that. 10:30, 11 here. When the market's starting to improve from 11:40. All right, we could take a quick look at the market, but the market was pretty much a consolidation today. So I don't know if this market's improving that much. I think it's just part of the range, so it's neither against you or with you on your trade. But what was with you was the open today. All growth names were very relatively strong. Uber just broke lower and closed below yesterday's low. Ended up giving back a lot in the super trade. When noticing Uber flip from relative strength to relative weakness this morning, and it was bull flagging on the intraday time frame, would cutting some of the Uber when it broke the consolidation low to protect my profit be a good idea? I know we should stay with the game plan and trailing rules, but watching the stock dropping lower and lower and giving back most of the P&L hurt a lot, especially from my mental perspective. How would you deal with the mental side? Would you mind talking about it as well? Sure. So one thing that I can assume about you, Rex, because you do a pretty good job communicating in the VTF, and I think that helps you and helps the traders around you, and it's also helped me to learn a little bit more about your trading and your trading style as you're communicating your trades in real time. I know that you trade with game plans that tend to be very greedy. I don't know if that's the case with this Uber trade here specifically, but I know that a lot of your trades, I think you were in that GXAI with me. I think it was probably only you and I that still had stock at highs pretty much. But that's because you've been trading and implementing these really greedy game plans with your trades, and you're doing that to maximize reward. And I don't hate that at all. I do the same. I implement really greedy game plans. But the thing about implementing those really greedy game plans is that you will have these other scenarios where it inherently means that you're going to give back a lot of P&L because of how greedy your game plan was to begin with. So I don't think that this is a case where you can have your cake and eat it too. I think that this is a case where you either need to be game planning in such a way where you're being a little bit less greedy, so you're trailing a little bit tighter, or you're booking profit a little bit faster, which means that you're not going to have as much Uber stock at $85 like you probably would otherwise, because I know how greedy your game plans have been. But then you got to be comfortable with the fact that you're going to give back a lot of P&L at certain points, because that's the type of game plan that you're implementing. Or you can be a little bit less greedy on your game plans and have booked more profit on the way up and booked more profit with tighter trailing stops. You could have potentially violated my third trailing rule, which I do sometimes to protect P&L, where you didn't get a new high, but you've got these pivot lows here that are in equilibrium that you could have used to take off a little bit of stock on a break just to lock in some additional profit. But again, having that in your game plan means that when your trades work out really, really well, that you're going to have a little bit less stock and you're going to make a little bit less that way also. So again, I don't think that this is a situation where you can have your cake and eat it too. I think that you either need to be game plan where you're like, you know what, I'm super greedy with these game plans. I love the daily chart. I love the relative strength. I love everything. I'm going for it. And then when it fails, you can't be upset that you gave back a lot of P&L. Or your game plans are not as greedy as they've been, which then means that if this thing went to $85 today off continued relative strength and growth squeezes and everything else, that you're not going to make as much money. So I really think that that's kind of the root of it, and I can only even answer that question that way again because you do such a great job communicating, and I would encourage all the other traders here in the VTF, especially newer traders. You've been with us for a while now, Rex, but you started with us as a brand new entry level trader, and you were one of those guys who were just constantly every afternoon coming at me with questions in the afternoon meeting, and I think that that has helped you a lot, and I think that your intraday communication helps you a lot as well, and helps me to know you better and to be able to therefore give you better feedback. So I want to take a moment to praise you for that and encourage everyone else who might be listening to this afternoon meeting to do more of that as well, because it can only help them. But yeah, I mean that's pretty much it. I don't think that you should be changing your game plan in real time. It's just a matter of what the game plan was to begin with. So I do appreciate the question, Rex, like always. Scrolling down here through the VTF. From Cameron, can you talk a bit about your path to consistent profitability and your advice to someone struggling to find that consistency? Sure. So, look, it's a long journey. Trading is a long journey. I'm still on that journey, by the way, which is great. I've hit a point here where my trading overall is really good after years and years and years of work to get to where I am. And I've got that to kind of fall back on even as I'm continuing to learn. But the journey is definitely an ongoing journey, and there's just so much to learn. It takes a lot of time, and the more effort that you can put in, especially pre and post market, the faster you can get through that learning curve to actually become consistent with what you're doing. But the broad goal that you're working on is similar to what I was saying with Vincent's question earlier, right? So the key to being a successful trader, the key to being a consistently profitable trader, is to be consistent in regards to your actions to the market. If you're doing things willy-nilly and you're doing things based on feel, I don't think that can actually give you consistency in the market. And I look, there's some traders out there who can trade on feel and maybe they're really good, whatever. I think that is a very, very far and away anomaly, and that for the most part, you know, I think you could take like a Scott Redler as an example. Like Scott, I don't think is like a trade on feel, like natural success kind of guy. I think that he worked very hard to establish rules for his trading that he follows no matter what, and that enables him to be successful. Even if sometimes we can see things with a little bit of feel in certain situations, it's not what you want to be trading off of. So the only way that you can be consistently profitable is to be consistent in your approach to markets. The only way that you can be consistent in your approach to markets is to have rules that govern everything that you do in regards to the market. That rule set needs to be based on an edge that can breed consistent profitability. So if you're a newer trader and you're struggling to find that consistency, that means that you are in the stage of your career where what you are doing is you are in that rule developing phase. And that's a very hard phase to be in, because inherently it means if you are still developing the rules that you need in order to be consistently profitable, it means that you're not consistent, right? You are inherently not consistent because you're figuring it out, and that's okay. The first thing that you need to do if you're in that stage of your trading is make sure that your risk management's in place. Make sure that if you're focused on any rules first, as you're developing your set of rules to govern your trading, start with the risk ones. Those are the most important ones. I think it's okay for newer traders to not make money as long as they are managing their risk properly and they're not digging themselves into a hole that they can't get out of. And then you work on it, and it's going to require trial and error. It's going to require a lot of adjustment over time. I generally think that adjustments to trading rules as you develop them should never be based off of one trade. It should be based off of like a data set series of many trades over the course of weeks or months even, that then say, okay, this is a good rule, this is a rule that needs adjustment, whatever. And that is then how you slowly, build out those rules that can create consistency, which can create consistent profitability. And part of that is even just figuring out what type of trader you're becoming. Everyone here is probably most exposed to me and to my approach. My approach might not necessarily be right for everyone. As a matter of fact, I'm quite sure it's not going to be right for everyone. We have different types of personalities, and those personalities require different trading approaches. And the truth is also, I've never seen two traders who are successful in the exact same way as one another. I've seen traders who are successful who are similar to one another, but never like the exact same. So you don't want to only learn from me, to be honest. Like, learn from me. I'm happy to act as a resource for everyone, obviously, but don't only learn from me. Learn from Josh, learn from his approach, learn from Pat, learn from all the good traders in the VTF who communicate, learn from people who are outside of the VTF as well. I am not a believer that my way is the only way. Learn from, I don't know, I mentioned Scott Redler already. Learn from someone like him, or I like J.R. Romero. He's a really good guy. I haven't followed his trading too much, but we talk a lot. He's a really good guy. I'm sure there's a lot you can learn from him. I've learned from so many, to get to where I am with my trading and my approach and my rules, I have learned from so many sources. I've stolen what works based on what I've seen other people do, and I have eliminated what I've seen other people do that worked for them that might not be appropriate for me from my approach as I've developed it. I've learned from podcasts, from books, from blogs. Anybody remember when blogs were a thing? Trading blogs. I used to have a whole bunch of trading blogs that I'd be reading every day. Learn from a lot of different other traders, and that's what you need to do. You need to learn from as many resources as possible, with the goal of developing the rule set that actually can create that consistency. And that, at a minimum, probably takes 6 months into a trading career to get to that point. 6 months to a year. So yeah, that should be the focus, Cameron. I hope that helps. Cool. Looks like I got through the questions in the VTF, so I'll pop over to YouTube a little bit. First from our buddy Sebastian. What do you think of buying the inside day in Pfizer? Also, what about shorting Tesla in the inside 15 at 9:45? Right, so inside day in Pfizer. Pfizer was on our list 2 days ago. Worked great. I love this for anyone who might be long it already, that inside and up pattern. And if you're not in it, you could be looking at that for continuation. Yeah, I like going after this today. Unfortunately, it didn't close well. A lot of things that were strong in the morning rolled over heavily in the afternoon, and especially a lot of growth type of names. So that's unfortunate, but I like the trade. I like looking for that 1, 2, 3 play after this breakout, especially as this thing is sitting above 28. What do you think about the Tesla 15 at 9:45? I like it. I'm not super focused on 15-minute charts at this time of the day, to be honest. I didn't even notice it at that time while I was in the trade. I like this inside 5 also, to be honest. The second 5-minute bar of the day. What's the risk on this inside 15? Almost $2. It's not terrible for Tesla. $2 worth of risk on an inside 15 at that time of the day. It's not terrible. Yeah, I don't hate it with the bad news, breaking down the relative weakness, as long as the risk makes sense to you. Hope it helps. From Apex Joy, thanks for sharing your Chinese stocks a few weeks ago. It looks like FXI is breaking out to the upside. I appreciate the thank you. Yeah, it's trying to. Some of them have got a little bit extended. This JD has been phenomenal, but it's getting a little bit extended up here. BABA is still in its range. FXI looks good as well. It's trying to break out on the daily chart. These things are very hard to trade because they're so gappy, and a lot of those gaps are based on what the Chinese government does and implements, which is inherently super difficult to predict. But yeah, so far so good. I'm still in JD and BABA. I'm looking for continued upside. No problem, Plasma Lab. Glad you've been joining in. Glad you're learning. From Gabriel, do you like NXT? I hate how whatever the bottom comment is on YouTube is always blocked by this little like heart thing. So I can press this and do some cool emojis and stuff, but it blocks me from. Can I move that? I'm such a beginner of technology, so I can't read the word that's in parentheses. Do you like NXT and ASPN here close to the 52-week breakout? Let's take a look. This NXT looks great. Next Tracker. I don't really know the name. I've definitely seen it come across the radar before. But yeah, it looks great. You got these upper tails here that it's got to work off some of that overhead supply still, but this thing looks like it might be ready soon. So yeah, it looks great. And ASPN. This also looks great. Is that tail real though? I don't like that. I don't like the tail today. If you asked me yesterday, I would have said I like this chart a lot. Today, I don't like this push through failure on this tail. It probably needs time to reset up, especially with all this volume here. So I liked it coming into today, but now I think it needs a pause. So that covers YouTube. Back over in the VTF from David L. Not a question, just a self-review for the day. PayPal, 60 level. Would have been a good trade in hindsight. Normally trades slow and are easier to manage. Yeah, the 60 level is a little bit sloppy. Was there volume confirmation in this thing early? Not really. I would have liked better volume confirmation here, but there's a good looking flag pattern that builds out into 10 a.m. with an inside 5 at the end of it after the stock has already been showing strength. And then at that point it's trading above 60, so the daily chart looks good. I like this as a setup in here if you were eyeballing it. Below that looks a little bit tricky to me on an entry. Good volume today. It was good volume only starting at this point though. after that flag was already breaking out. Initially, it was average volume. News catalyst of a new VP hire. Okay, it was like a news catalyst. Target price was close to 63 on the 200 EMA daily chart, but nope, I didn't pay attention to the daily. I tried the counter trend shorting at key levels like an idiot. I got stopped out. I don't mean to laugh, but just your commentary. Third strike and I was out. I kept to my rules and I let go of the stubbornness. Better prep would have made for a better trade. Hashtag day trading is the best job in the world. Yeah. So, daily chart, this is always where I want to start. To me, I think I mentioned it yesterday, this is my most important chart. It's my most important time frame. Everything I do starts with the basis of an understanding of the daily chart. That's one. Two, you're just making some commentary here. I probably don't need to tell you what you already know. Trading against the trend is much more difficult than trading with the trend. So if you're trying this thing counter trend at certain points, first thing I would say is communicate better. Communicate to the team, hey, this PayPal had a big move. I'm looking to the short side, and we may be able to give you some feedback that could make or save you money on, hey, I agree with you, that looks great, or hey, I think you're getting involved in this a little too early, and maybe you're fighting this trend. So repeating what I say all the time, communication here in the VTF only always helps everyone. But yeah, counter trend trading is tough. So appreciate the commentary, David. All right, gang, it looks like I got through everything in the VTF. How to know if a trend has started from Carol. So a trend exists because it's a pattern of higher highs and higher lows. That would be kind of the dummy answer, which is not what you're looking for. The better answer to your question is a lot of what I'm trying to do with my own trading. Sometimes I'm just trading a trend that's already in progress, where I'm looking for trend continuation. But also a lot of what I'm doing is I'm trying to identify the catalyst that will set off the trend to begin with. So a great example, though I only held it for $70 above the level, is NVIDIA. Just the first example that kind of comes to mind, NVIDIA on the $500 breakout. NVIDIA, before it broke out through 500, before January 8th, is not trending big picture. It's consolidating big picture. It's making an ascending wedge big picture. So if you're buying the breakout in NVIDIA through $500, again, just as an example, the idea here is you want that breakout to be the catalyst that starts a trend, and then you're in the beginning of it. That's why, again, daily chart levels are so important, and that's why I love breakouts and breakdowns. They're the most basic, most dummy trade out there. They're the first trade that I would teach to a new trader. They're the first class in my training program classes. Is very simply how to buy a breakout, how to short a breakdown. Yet, in the right market environment, not in all market environments, not in ranging market environments, but in the right market environments, sometimes you need the range in order to get the breakout that gets the trend catalyst, what we're talking about to begin with. But in the right market environments, it's a dummy trade and it can work so well. It's a momentum trend continuation trade, and it can be the catalyst that leads to a trend. All the trading that all of us have done this year, all you need to do is buy, and this sounds like an idiot statement to say, buy the $500 breakout in Tesla and be trailing it, because then you'd still be in $400 later. How many other trades do you need to have had this year if you just took that one, right? So how do you know if the trend has started? Well, you can identify a trend because it's in a pattern of higher highs and higher lows, like the SPYs and the Qs are. So you will assume that dips down into equilibrium area within the confines of that uptrend of the SPYs and the Qs, as long as no major support levels are lost, are going to be bought and are going to be the potential pivot low of that trend, right? And we have a couple different trend continuation trades, the hammer trend continuation trade, and the inside and up trend continuation trade that I love. And that can be implemented in any stock where you see that there is currently a pattern of higher highs and higher lows, or lower highs and lower lows. That's one. And then two is So that's how you can identify that there's a trend that exists. Two is a lot of what we're doing is we are trying to identify the catalyst which will lead to that trend starting. And again, a lot of times that's like a breakout of a range or a breakout of a base, for example, this NVIDIA. So appreciate the question. All right, gang, it looks like I got through everybody's questions in the VTF and in the YouTube channel. I hope everyone had a great day today. I hope you had some healthy learning and profitable trades. Keep up the great work. Have a great night.